Hi there. In today's video, we explain Form CT600J and when UK companies must disclose tax avoidance schemes to HMRC. Understanding these rules is essential for accurate tax filings.
Hello and welcome. This is a really essential guide from Pro Tax Accountant. Today, we're diving deep into a critical bit of UK tax compliance that you absolutely need to know about, Form CT600J. Look, if your business is using any kind of advanced tax planning, you've got to understand the rules around disclosure. So let's just get straight into it. You know, for any ambitious business owner, director, or contractor here in the UK, trying to minimize your corporation tax bill isn't just a good idea, it's smart business. But, and this is a big but, there is a very fine line between legitimate, savvy tax planning and what HMRC considers aggressive avoidance. So let's just kick things off with a pretty crucial question. Is that creative tax strategy you've put in place actually compliant, or could it be a ticking time bomb? Let's make this real for a second. Picture this. A consultant, sharp suit, confident pitch, presents your business. Maybe it's a growing SME or even a startup with what they call a brilliant strategy. Sure, it sounds a bit complex. Maybe it involves some unusual loans or transactions, but the promise? A massive cut to your tax bill. The kind of savings that could fund your next big project. It's incredibly tempting, isn't it? But this right here, this is the exact moment where understanding your disclosure duties becomes absolutely vital.
Right, so to help you get your head around all this, here's what we're going to cover. We'll start by talking about the tax-saving trap. Then we'll look at HMRC's own early warning system, which is called DOTAS. After that, we'll decode the form itself, CT600J, and then we'll get into the red flags you need to watch out for. We'll also cover the very high cost of getting this wrong, and then most importantly, we'll map out how you can navigate all this and stay compliant.
So, what even is this trap we're talking about? Well, it's that moment when a so-called smart tax plan suddenly crosses an invisible but very real line. It's not just about the goal of saving tax, it's all about how you're doing it. See, certain methods have very specific features that HMRC legally requires you to tell them about upfront. Falling into the trap means you're facing this whole regime completely unprepared. To get ahead of this, HMRC decided to stop playing defense. You know, for years, they were stuck in this endless game of cat and mouse, only finding out about tax avoidance schemes years after the fact. So they came up with a proactive solution, a way to get an early warning. And that system is what we know as the Disclosure of Tax Avoidance Schemes, or as you'll hear me say a lot, DOTAS. And what is DOTS exactly? Well, think of it as a legal rulebook. It basically forces the people who design these tax schemes, the promoters, to tell HMRC about their new ideas right at the start. The whole point is super simple. Get information early on how these things work, and crucially, find out who's using them. It's all about taking away the element of surprise that promoters used to have. Now, this slide is really telling because it shows how this whole thing has been evolving. It all started back in 2004, and the idea was just to get that early warning. But just look at how things have changed. By 2015, the penalties for the users, and that means you, the business, were seriously ramped up. And the change coming in 2026, that's a huge deal. HMRC will be able to hit you with civil penalties directly. The message couldn't be clearer. The system is only getting stricter. So, how does this actually play out in the real world? It's a pretty straightforward four-step process. First, the promoter tells HMRC about their new tax-saving idea. Then, if HMRC thinks it's something they need to know about, they issue an 8-digit scheme reference number, or SRN. That number is then passed from the promoter to all their clients using the scheme. And here's the bit that really matters to you. Your business then has a legal obligation to report that SRN on its annual corporation tax return. And the way you do that? That's Form CT600J. And that four-step journey leads us right here to the form at the very heart of this discussion, the CT600J. It's so important to understand this isn't just another bit of admin. It is the formal, legally required way for you to meet your reporting duties under that whole DOTAS regime. To be really specific, Form CT600J is a supplementary page. It literally attaches to your main CCT100 company tax return. Just think of it like an extra chapter you have to include if you've been involved in one of these disclosable schemes. And I have to stress, it is not optional. It's a mandatory declaration. It puts your use of that scheme right on HMRC's official radar. Okay, so when exactly do you have to file this thing? The triggers are actually really clear. The biggest and most common one is if you get that 8-digit SRN from your advisor. But you also have to file if you're part of a notifiable arrangement that's designed to give you a tax advantage. And that's true even if you won't see that benefit for years. And finally, if you happen to be working with a promoter who's already on HMRC's watch list and they give you a promoter reference number or PRN, that's another trigger. The bottom line is if any of these apply, you have an absolute duty to file.
This brings us to a massively important professional tip. Good paperwork is your first line of defense. You have to keep meticulous records of all the tax advice you receive. And here's the bit people miss. It's just as important to have a record of why you and your advisor decided a strategy was not notifiable as it is to record one that is. That's your proof. That's how you show you've done your homework if HMRC ever comes knocking.
So, you might be wondering, how does anyone, a promoter or HMRC, decide if a scheme is notifiable to begin with? Well, they use a kind of checklist of characteristics which are known as the hallmarks of tax avoidance. These are basically the big red flags that tell them a scheme needs to be disclosed. The rule here is a two-part test. It's pretty simple, really. First, getting a tax advantage has to be one of the main reasons for doing the arrangement. And second, the arrangement has to tick the box for at least one of the specific hallmarks that are actually written into the law. If a scheme meets both of those conditions, bam, it has to be disclosed. Let's just look at two of the most common hallmarks you're likely to come across. Over on the left, we've got the confidentiality hallmark. Honestly, this is a gigantic red flag. It's triggered if your promoter is telling you to keep things secret, don't share the details with HMRC or anyone else. Then on the right, you've got the standardized tax product hallmark. This applies to those off-the-shelf schemes that use template documents and are just sold to tons of different clients. That's a dead giveaway. It's a mass-marketed product, not tailored advice designed just for your business. All right, now we need to talk about the consequences. Because failing to report an SRN on your CT600J, that is not a small slip-up. HMRC sees it as a serious failure to comply. And believe me, the financial penalties are designed to hurt. They're a powerful deterrent for a reason. This chart just shows you how quickly these penalties ramp up for you, the user of the scheme. Your very first time failing to report an SRN can land your company with a £5,000 penalty. A second failure within 3 years, that jumps to £7,500. A third time, or any time after that, £10,000. And that's per scheme, per failure. You can see how this could get very expensive very fast. And here's the detail behind that chart, laid out in black and white in the Taxes Management Act. The whole penalty system is set up to punish repeat offenders harshly. And while these penalties for users are pretty hefty, it's worth knowing that the penalties for the promoters who don't disclose their schemes in the first place can be, well, astronomical. We're talking fines of up to £1 million in some cases. It just shows how seriously HMRC takes this stuff. Okay, so with the risks being that high, how on earth do you steer your business onto the right path, onto the path of safety, and just make sure you're fully compliant? Well, it really all boils down to three things: awareness, diligence, and getting the right professional advice. And here is something that is so often misunderstood. Receiving an SRN is a red flag, not a green light. Some promoters might try to spin it and say, oh, it's got a number, so it must be HMRC approved. No, the absolute opposite is true. An SRN means that scheme is now officially on HMRC's radar, and it's been flagged for a potential and probable investigation. When you file your CT600J, you are formally confirming that you are a user of that flagged scheme. So let's just pull this all together. If you take away anything from this, please remember these 5 crucial points. 1. Any plan that sounds too good to be true probably carries enormous risk. 2. Your duty to report an SRN using Form CT600J is a legal one. 3. Saying I didn't know is not a defense. 4. The penalties are severe and they are designed to escalate fast. And 5, and this is maybe the most important, getting proper professional advice isn't just a nice to have. In this environment, it's an absolute necessity. And of course, we have to include this important disclaimer. This presentation is for general information. It's for educational purposes. It is not specific professional tax advice. Tax law is incredibly complex, and everyone's situation is different, so you should always talk to a qualified advisor about your own circumstances. Look, if you want to take control of your company's tax position and just have the peace of mind that you're on the right side of the line, the team here at Pro Tax Accountant is ready to help. For expert advice on CT600J, DOTAS, or really any aspect of corporate tax planning, just get in touch. All the details are right there on the screen. And please don't forget to subscribe to the YouTube channel for more essential guides just like this one. So we'll leave you with just one final question to think about. Now that you understand the rules, you've seen the risks, you know the red flags to look for, just take a moment and ask yourself, how confident are you, really, in your company's current tax position? Thanks for watching.